and welcome to The Chart Show. Each week I'll be sharing my analysis on 3 key stories that are getting a lot of attention among investors. I'll be breaking them down not just from a fundamental perspective, but with technical analysis on the charts as well. This week's 3 charts are Apple, which is inching closer towards $3 trillion, Ocado after it won a patent infringement trial, and Bitcoin in a volatile couple of weeks for cryptocurrencies. Shares in Apple surged nearly 3% on Friday thanks to optimism from the analyst community, with a series of price target upgrades from Morgan Stanley, JP Morgan and Wedbush in December. The stock is up by nearly 20% since the start of November, sharply outperforming broader US indices, and it looks as though it could reach a market valuation of $3 trillion. That's thanks to optimism towards its augmented reality product pipeline next year, potential subsiding in the chip shortages and supply chain problems heading into next year as well, and of course its very loyal customer base. Let's take a look at the chart of Apple because the ascent in Apple's share price has gathered pace lately, with the next major resistance hurdle at $200 a share. Technical indicators, however, suggest the shares are looking a bit overbought, which is why we've seen a bit of a short-term pullback this week, possibly before the resumption of the uptrend. After an initial decline in the first quarter, shares have gone from strength to strength this year, gaining more than 50% since the trough in March. Shares in Ocado hit the top of the FTSE 100, gaining more than 9% on Tuesday after it promised the best ever Christmas. The company also won a patent infringement trial against AutoStore in the US and the UK, helping to boost shares. In a trading statement, Ocado Retail, which is the partnership between Ocado and Marks & Spencer's, reported orders up 9% year-on-year with a 22% increase in customers. It says its customers are on track to reach the 1 million milestone, with order growth positively impacted by changing conditions in the post-lockdown UK labour market. Shares in Ocado, however, are down by about 40% since the January high. Taking a look at the chart of Ocado, after a double dip formation at the end of last year and the beginning of this year, the shares have been trading in a descending trend line with lower lows and lower highs, retracing around 60% of the gains seen since February of 2020. However, today's positive price action saw the stock break back above 17, with the next major resistance hurdle at 20. A break above 20 would create a higher high and negate some of the downtrend that's been in play for most of this year, potentially paving the way for a new sideways trend or even an uptrend. After briefly trading above $50,000 over the weekend, Bitcoin suffered a heavy sell-off on Monday, dipping below $46,000, its lowest level since October. Uncertainty around Omicron and comments from the SEC's chairman Gary Gensler about crypto regulation have pressured Bitcoin. It's already been under pressure since November, driven by talk of Bitcoin whale selling and concerns about China's crypto ban. There was also a sense that after the 135% rise from July to November, price action was starting to look overbought and ripe for a pullback. However, the extent of the recent declines, shedding nearly a third of its market cap since the high, has caught some investors off guard. One thing that's for sure is that the crypto complex as a whole is notoriously volatile and has the potential for wild swings in both directions. While many will see the latest pullback as a buying opportunity, it is also a timely reminder of the risks involved in investing in such a volatile asset class. Let's take a look now at the chart because Bitcoin has been trading in a descending trend line since the peak in November, with lower lows and lower highs, retracing around 75% of its prior gain from September. Having broken below key support term resistance at 50,000, the next major support hurdle is at 43,500, with a break below potentially paving the way for a move down towards round number support at 40,000.